I have two scenarios in my 6-year career where two people have canceled their whole life insurance policy, right? One of those people canceled their life insurance policy on a child, right? So they were funding a policy on a very, very young child, I think maybe like two or three, and then they canceled it. They stopped it. Why did that happen? Well, number one, that was very early in my career. There were some things that maybe didn't get expressed or taught, or maybe I didn't provide enough education. So holding myself accountable, where it's like, okay, maybe I didn't know enough to help that client, even though they wanted to work with me. And even though we went through the process and designed a policy and whatnot, it wasn't strong enough education for them to have a conviction to keep that policy in place. So ultimately, that led to a failure. And on top of that, there really wasn't a strategy with that particular policy. It was just a matter of saving money in a whole life insurance policy that's going to grow tax-free guaranteed for the rest of that child's life. And that policy can be used, say, years down the road, right? We're talking 10, 15 years down the road. They're only paying in like $500 a year, $1,000, nothing crazy, very low dollar amount. So when something like that happens, what I didn't know at the time, in hindsight, what I see now after working with so many different families, is that particular family did not have the capacity to think that far out. 10, 15, 20 years, when this child is 2 years old, if I start saving money into this asset, $500 a year, $1,000 a year, whatever it is, 20 years from now, when they're 21, 20, 19, 18, however many years out, that they can use that policy to finance their first car down payment, to possibly finance their first down payment on a home, to possibly finance the upfront capital to start a business, start a YouTube channel, start a online business of some sort, an e-commerce store, and that would give them that upfront capital. But that family did not have that capacity yet to think that far out. So if I was to do it all over again, I probably would still write the policy, because the value of protecting your child, right, having a death benefit on your child, is still extremely valuable. The only thing I would change differently if I had to do it all over again with that particular client is I probably would have just wrote a convertible term life insurance policy for that family on that child, which is more of it would have been a much cheaper payment, let's say, a cheaper upfront cost, and the sole focus would have just been death benefit. And maybe as they built more discipline and education around the strategy, then they say, well, hey, at any point we can convert this term to a whole life to start building it for some of the different, methodology here. So that's one example of a failure, right? Another failure example, this is less of a failure. This is more of just a lack of communication between me and the client. And this is something that I've just learned that just comes with hindsight. Like, I would have never known that until now going through the process. So I'm dealing with a client right now that I've been serving for years, since 2019. Been a faithful client, right? There's been gaps where the client and I did not speak for a period of time, and they put themselves in more debt, and then they reached back out, and then we were strategizing, paying down debt. So this is a client, 2019, that initially found me on YouTube, and their primary goal was to pay off debt, save money, do the infinite banking strategy. We literally did all those three things. They radically paid off debt extremely fast using the velocity banking concept. We were funding a life insurance policy anywhere from like $12,000 to like almost $20,000 a year. Max funding a policy faithfully, consistently, each and every year. We're borrowing from the policy, make different moves, pay off different debts, take care of different expenses, right? This particular client, I was communicating with the husband only, okay? Husband implies there's a spouse, okay? From 2019 all the way to 2024, I've never communicated with the spouse, right? So we got a husband and we have a wife. I never communicated with the wife, only the husband. The husband is the head of the household. He makes majority of the financial decisions, so I thought, okay? Financial decisions made by him, head of household, the man of the house, okay? Now, one thing that I've learned over the years working with grown men and grown women, okay? And when I mean grown, I'm talking not just in age, I'm talking maturity, I'm talking been through life, been around the block, gone through divorces, been married, have had kids, has had lots of debt, has seen life, okay? A grown adult. Those of you that are watching, you know who you are. You are a grown man, you're a grown woman, okay? I'm 28 years old. I started my journey at 22, 23 years old. There are certain dynamics that I just did not understand until now. Now I am 28 years old. I am engaged to a woman that's going to become my wife. I now have a home. I have debt on this home, right? I have more responsibilities. I am becoming the man of the house, right? The head of the household. And yet there are still certain things that I'm learning, that dynamic between man and woman, right? What decisions get made, what certain compromises occur, etc., etc. So with this particular couple, right? Again, talking to the husband from 2019 all the way to 2024, we've been funding a policy faithfully, paying off debt faithfully. And then 2024, between end of 2023 and 2024, the client, the husband, started to stop paying into his policy on time. It started to form a pattern where he wasn't like consistently funding the policy. He was waiting, and then the policy would go into the grace period and then eventually go into lapse pending, right? Policy has never lapsed, but it was in lapse pending, awaiting a payment. And multiple times, it was like I had to re-educate the client on why they had this asset in the first place. So ultimately, it's gotten to the point where we are now making the last payment on his policy, which is occurring over the next few days. Meaning, he's never going to pay in another dollar into this policy, right? Now, that's going to come with certain cons, some negatives, right? If we're no longer funding a life insurance policy, it's like we're no longer saving money, right? That's basically what has concluded for this particular client. They believe that they have created enough assets around themselves. They're debt free. They paid off debt. They believe that they are self-insured, right? This is coming from the wife, whom I never spoke to. She believes that they are self-insured, which is a statement that's simply not possible. It's impossible to self-insure yourself. Either you have insurance or you don't, right? Either you have health insurance or you don't. Either you have homeowners insurance or you don't. It's impossible to self-insure, right? Even if you're someone that owns your home outright, right? And because you own your home outright, and let's say you got a bunch of money in the bank, okay? And you say, you know what? I'm going to do away with homeowners insurance. I'm just not going to pay for homeowners insurance anymore because I have X amount of dollars in the bank, X amount of dollars in assets, X amount of dollars in guaranteed income for life, and a paid off home. So I'm just going to do away with just not paying that couple grand on homeowners insurance. Okay. And then if something happens and the house burns down and you don't have homeowners insurance, it is up to your responsibility to insure and protect the home. So what would happen is you have to pull from another asset, another vehicle to replace that entire home. And what we often don't run the math on is what is the true cost of trying to self-insure yourself as it relates to your life. So if something happens to either of the spouses and they decide to remove the cost of life insurance and then that person passes away, okay, now it's up to the wife to liquidate assets to replace some or all of the income that that spouse was bringing in, right? And depending on how much time we have on earth is there's certain things that are just unforeseen that we're just not running the math on to calculate, which is, again, that comes with certain negatives if we believe that we can self-insure ourselves, which I don't think is possible. Either you are or you're not, right? And then if you're not, then you have to understand that you're going to have to pull from something to cover that particular tragedy or expense. So in this case, we are now paying the last payment into the policy, and we're doing what's called a reduced paid up option, which is something that exists within a whole life insurance contract that allows you to remove the cost of insurance, right? And this was our like go-to option because the wife actually wanted the husband to cancel the life insurance policy, which I had to like really like put a lot of time and effort to like educate and say, hey, wait a second. Like, as your coach, as your agent, as your advocate for your legacy, financial wealth, generational wealth building, you are grossly underestimating the value of this product if you cancel it. We're talking about something that you've been overfunding for nearly 5 years. There's over $50,000+ in cash value built up. We're talking about a multiple 6-figure death benefit. If you cancel this policy, it's as if you had a rental property that's about to be paid off. It's cash flow positive. You're getting tax benefits, tax deductions, right? And right before you pay off the rental property, you voluntarily put that property into foreclosure. It's like, who on earth would voluntarily put any one of their assets into foreclosure by just stop paying into it? Like, you have a rental property, it's cash flowing, it's doing well, right? And you're about to pay off this property. It's got a ton of equity in it, right? You're getting tax benefits. And then you just decide to stop making mortgage payments and let it go late, let it go into default, and now you're in foreclosure. You've got the money. It ain't like you don't have money. It's like in this example, you've got the money, you got the cash flow. Why on earth would you ever stop funding your rental property? Why would you ever stop paying the mortgage payment on a rental property? Worst case scenario, you sell it, but you don't let it go into foreclosure. And that's equivalent to canceling a whole life insurance policy. If you've been funding it for years, one of the things that you can do is a reduced paid up if things got really bad financially. In this particular case, with this one client that I've dealt with, I've learned that in hindsight, I have to communicate with the husband and the wife, because even if the husband tells me I am the man of the household, I make the decisions, and I take that at face value, but then 5 years later, wife has the influence to tell you to cancel an asset in the portfolio that's going to create generational wealth. Because we're not even thinking about the unborn people in our family. We're not like, do you understand how valuable it is for an unborn individual in your downline to benefit from your wealth? We're talking multiple 6 figures of, even if you never spend that money, but your children's children get to spend that money. You radically shift culture in your household for the better. That's what's at stake here if you cancel an asset like a whole life insurance policy. That's what's at stake. And all it costs you is a couple $100 or a couple $1,000s a year to maintain it. But when we don't have the education, when we don't know what we don't know, what does that ultimately lead to? Leads to failure, leads to destruction, right? So I'm taking it upon myself to double down on education, to take extra time with clients to make sure, wife, do you understand what we're saying here? Husband, do you understand what we're saying here? Are we ready to move forward? I'm willing to have 2 and 3 extra phone calls before I write any policies moving forward on any one of my clients because of hindsight.